Good morning and welcome to Market Day Report. I am Chris Swift, and I saw some action this morning that I think we're all going to be interested in taking a look at. So we know the tariff ordeal came out yesterday and caused a little bit of a reaction in the markets and a little bit negative right now. July corn down 7 1/4, 4.58 even, 55 1/4 is the low tick. New crop December 4.43 even, down 5 3/4. I saw the soybeans down double digits, down 22 1/4 on the July contract at 10.22 3/4. The Novi beans new crop 10.13 3/4, down 23 1/2. Saw the wheat market got hit pretty hard too as well. July down 8 3/4 at 5.44. Looks like a nickel off the low at 5.39 even. December wheat 5.81 1/2, down 9 3/4. And let's see what Kansas City wheat. Kansas City wheat down 6 1/4 at 5.73 1/2. 67 is the low on that. December 6.09 down 6 3/4. And take a real quick peek at Minneapolis spring wheat down 6 1/4 on the July at 6.01 3/4. Deese at 6.32 3/4, down 7 1/2. I'm anxious to get my guest in here, Brian Hoops. Brian is with Midwest Marketing, and we saw a little bit of what the tariffs did overnight. Kind of what are we going to be expecting now as we move forward from this?
Well, good morning, Chris. Yeah, the markets do not like uncertainty, and we have a lot of that in our world right now. Uncertain how the countries are going to react to these tariffs, uncertain if we're going to have retaliatory tariffs or not. Certainly what we're seeing here in the overnight, especially like in the equity markets and the gray markets, probably not indicative of where we're going to be at in a week to 2 weeks or even a month from now. There's a lot, just that uncertainty has produced a major sell-off in a host of markets, including crude oil, which is down 7% this morning, stock market down 3%. The grains, all these markets gapped lower overnight and are trading sharply lower, including the US dollar with a couple 100-point losses. So there's a lot of big moves happening, a lot of uncertainty. But going forward, I think we're going to be in a much better place. It's going to take some time. There's a lot, when you take that medicine to get healed, it tastes bad at first, but eventually you turn around, and that's kind of what we're going to feel here now. It's going to hurt. It's going to feel bad. The outline that President Trump gave yesterday, it does set us up for better things to come, but it's going to be very painful here in the near term. He also mentioned in his points a largest tax cut in history. We have the largest tariffs in history, and now he's mentioning the largest tax cuts in history. And I think that's a way for the consumer to have more money in their pocket to offset some of the higher costs that are probably coming down the line here in the near term. So a lot of pain. The markets that's what we're focused on here basically in the overnight. These export sales that came out this morning, I think, are largely going to be ignored. They were pretty much routine. We're more focused on trade reaction to these tariffs. There's no additional reciprocal tariffs against Mexico or Canada, which is good. And I think it will help us reach an agreement sooner rather than later with those countries.
Well, and I heard that on there, and I'm really interested. We're going to go away, take a real quick break. When we come back, let's talk about that for just a second, because that may be very important to our meat market. Y'all stick around and stay with us. We're going to come back with Brian Hoops in just a second. Welcome back to Market Day Report. We know a lot of the markets closed right up on the highs of the day yesterday. Cattle were one of them, along with the crude oil market, and we gapped sharply lower in the crude oil this morning. It's going to be very interesting to see how we open up the cattle this morning. Yesterday's close ended up higher at $1.25 on the April at 210.37. Just a little bit of last established cash trade at 214. June following at 207.40, up $1.97, and all the way out to Deese at 202.65, up 70. The feeder cattle market, it was stronger too, up 60 on the April, 288.87. That feeder cattle index is around 291.02, if I'm not badly mistaken. The May contract up 77 at 287.92, and the highest one on the board, August, at 293.70, up $1.30. And I may be wrong, but I think every time that August contract sets a new contract high, it's a new historical high for a futures contract. The hog market was kind of mixed yesterday, but just mostly lower, up 7 on the April at 87.45. That lean hog index is around 88.12. May down 35 at 89.15, and June down 50 at 96.52. Let's get Brian Hoops back in here real quick. And Brian, we left with the USMC Accord not bothered anymore. Does beef get to participate? Beef and cattle, do they get to participate in that, or will they be levied one of these new tariffs?
Yeah, I'm afraid we're going to see a lot of selling in the beef and the pork markets this morning. We had a very strong technical close, as you mentioned yesterday, new life of contract high closes yesterday in the cattle. I just snuck a peek at the bid and ask, and we're about 250 bid lower in the June contract this morning. I don't think April takes as big a fall as the June does. The rest of the months are going to come under some heavy selling pressure, I think, this morning. Pork exports this morning were marking your high, but I believe they're going to be largely ignored. I think that was probably some countries like Mexico and China stocking up on some pork ahead of these tariffs. And now that we have a 54% tariff against China, imagine that our number one buyer is not going to be very happy about paying those tariffs, and our exports are going to fall. So I think pork is going to come under some heavy selling pressure, cattle as well. It's probably going to be an ugly start to the morning for those markets, and especially when you look over at the outside markets, some of these equity markets for the beef, and you start talking about what the consumers are going to do for demand with the stock market being lower, anticipation that expenses will be going up this year as far as some of the costs of consumer goods. It's going to put a damper on the cattle market here, at least in the near term. We haven't seen any cash cattle trade yet, but I think the Packers will start coming in after that lower opening this morning, trying to buy some cattle at cheaper money.
Well, and especially with the equity markets down sharply and energy and just about everything a little bit lower, it sure points to the consumer saying, we're kind of tired of these higher prices. Brian, really do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Marketing. And